Hey there, curious minds! Today, we're diving into the exciting world of options trading. But don't worry, we'll break it down into simple terms that anyone can grasp. So, let's get started. So what are options? Options are like contracts that allow you to buy or sell a specific stock at a certain price within a set period. Think of it like reserving a table at a restaurant. You pay a small fee up front for the option to buy the meal later at a fixed price. In the stock market, these options are a way to potentially profit from price movements without actually owning the stock. Well, who introduced it? Options have been around for a while, but they were popularized by a guy named Fisher Black and his buddies Myron Scholes and Robert Merton. They cooked up a fancy mathematical model to price options, which laid the foundation for how we trade them today. You have heard about buying and selling options. What is it? So, let's talk buying and selling. When you buy an option, you're paying for the right to buy or sell a stock at a specific price before a certain date. It's like making a reservation. You're not obligated to go, but you've locked in a sweet deal. On the other hand, selling options is like being the restaurant owner. You receive a fee up front, but you're obligated to honor the deal if the other party wants to go through with it. You might also know types of options in Indian stock market. There are two main types of options: call options and put options. Call options give you the right to buy a stock, while put options give you the right to sell it. Options have expiry dates, which means they're like movie tickets with a limited showtime. You've got to use them before they expire, or they become worthless. Now, where to use these call and put options? Well, they can be used in option index and stock options as well. Wondering what are option indices or option index? If I ask you, have you heard of Nifty and Bank Nifty options? Most of you would say yes. Nifty and Bank Nifty are like the VIP sections of the options market. They represent the overall market and the banking sector, respectively. Hence, they are called as index. And guess what? Both have weekly and monthly expiry options. It means that you can take a trade and wait for a week or a month also before you exit the trade as per your analysis. So, you can trade more frequently if you like. In the Indian stock market, besides Nifty and Bank Nifty options, there are also options available for other indices and specific stocks. Let's take a brief look at these. 1. Nifty options. Nifty options are based on the Nifty 50 index, which represents the top 50 companies in the National Stock Exchange, NSE. They provide exposure to the broader market's performance. 2. Bank Nifty options. Bank Nifty options are linked to the Bank Nifty index, which includes the most liquid and large banking stocks listed on the NSE. They reflect the performance of the banking sector. 3. Nifty IT options. Nifty IT options are based on the Nifty IT index, which comprises information technology companies. They focus specifically on the IT sector's performance. 4. Nifty Pharma options. Nifty Pharma options are linked to the Nifty Pharma index, which includes major pharmaceutical companies. They track the performance of the pharmaceutical sector. 5. Nifty Midcap 50 options. Nifty Midcap 50 options are based on the Nifty Midcap 50 index, consisting of mid-sized companies after the top 50. They offer exposure to mid-cap stocks movements. 6. Stock options. These options are specific to individual stocks listed on the stock exchange. Traders can trade options on various companies. 7. Nifty Small Cap 100 options. Nifty Small Cap 100 options are linked to the Nifty Small Cap 100 index, which includes smaller companies beyond the top 100. They focus on small cap stocks' performance. 8. Sectoral index options. Options are also available for various sectoral indices like Nifty Metal, Nifty Auto, Nifty Realty, etc. We will see the full list shortly. These options track the performance of specific industry sectors. 9. Weekly options. These options have shorter expiration periods, usually a week. They provide traders with more frequent opportunities to trade. 10. Monthly options. Monthly options have a longer expiration period, typically a month. They allow traders to take positions with a slightly longer time horizon. Remember that each type of option offers exposure to different segments of the market. Traders and investors can choose options based on their understanding of the market, risk appetite, and trading strategies. Here is a list of sectoral index options, just for your information in the Indian stock market. Nifty Bank Index Options. Nifty Financial Services Index Options or FinNifty. Nifty IT Index Options. Nifty Pharma Index Options. Nifty Realty Index Options. Nifty Auto Index Options. Nifty FMCG, that is fast-moving consumer goods or daily purpose goods index options. Nifty Metal Index Options. Nifty Media Index Options. Nifty PSU, that is public sector undertaking bank index options. The name itself describes what stock companies would undergo which indices, so explaining it won't be a necessity. Please note that the availability of these options and their associated characteristics can vary over time. Here's a breakdown of the options with their expiry frequency, weekly or monthly, and the day of the week on which they expire in the Indian stock market. Weekly expiry options. Expiry day for the below list is Wednesday. This list shows the option index that has weekly expiry. Note, all weekly contracts will expire on Wednesday of every week, excluding the expiry week of monthly contract with effect from July 2023, but was previously Thursday. Monthly expiry options. Expiry day for the below list is last Thursday of every month. Note, if it's a government holiday on last Thursday of the month, then expiry day is always shifted to the previous day, that is Wednesday. Now, let's address the elephant in the room, risk. Options can be like a thrilling roller coaster ride. If you buy an option and the stock doesn't move in the direction you hoped, you might lose the money you spent on that option. And if you're selling options, there's potential for big losses if the market goes against you. It's like running a lemonade stand. Sometimes the weather doesn't cooperate. On the expiry day, things get interesting. You'll see traders making quick decisions as the clock ticks down. It's like a race against time to make the most of their options. Now there is a thing called option chain. Let's see what is it and how to use it. An option chain is like a menu that shows you different options available for trading on a particular stock or index. It lists various strike prices and expiration dates. You can use it to see the prices at which people are willing to buy or sell these options. To use an option chain, follow these steps. 1. Choose the stock or index. Start by selecting the stock or index you're interested in. 2. Check expiry dates. Look at the different expiration dates listed in the option chain. Each date has its own set of options. 3. Explore strike prices. The strike prices are the prices at which the options can be exercised. See which strike prices are available. 4. Understand call and put options. the option chain will show you both call options for buying and put options for selling. Understand which one you want to use. 5. Look at bid and ask prices. The bid price is what buyers are willing to pay, and the ask price is what sellers want. These prices help you see the current demand and supply. 6. Analyze open interest and volume. Open interest tells you how many contracts are active, and volume indicates how many are being traded. Higher values can signal more activity and interest. 7. Make informed decisions. Use the information from the option chain to make decisions about buying or selling options. It helps you understand the market sentiment and potential trends. Remember, an option chain can look overwhelming at first, but with practice, you'll become more comfortable using it to guide your trading decisions. And there you have it, folks, a quick, fun guide to options trading. Remember, options can be a fantastic tool if you know how to use them wisely. Learning and practicing are key, so buckle up and enjoy the journey of exploring the world of options. Thanks for tuning in. If you found this video helpful, don't forget to hit that like button and subscribe for more easy to understand financial content. See you in the next video.